Welcome to this third episode of Your Next Trade. Today it's called the Straddle Party. Please read the disclaimer at the bottom of this page before doing anything. So the schizophrenic market carries on after 5% up, 5% down, 5% up. We are down 5% on the week based on two things that we're going to be covering today, US CPI and the option expiry. So let's start with what I wanted to call this episode Straddle Party. So let me start with the S&P. So what is a straddle? The straddle is a strategy that involves simultaneously buying both a put option and a call option for the underlying security with the same strike price and the same expiration date. So that is not too complicated. Let me give you an example. So let's start with the S&P, the SPY, which closed at last Friday at 405. So if you were to buy an at-the-money straddle, meaning buying a call at 405 and a put at 405 expiring yesterday, so meaning a weekly call and a put, you will be paying roughly $974. If you look at the close on Friday as of yesterday, the same straddle was worth $19. More or less what you were making as a return was 96%. So in other words, if you were buying at the start of the week, the idea that the S&P will be only moving by $9.74 versus $400, which is roughly 2.5%. In reality, the market moved by almost 5%. So what you have is, at the start of the week, what we call the implied volatility, what the market was pricing for the S&P to move on that week, was around 2.5, 3%, and it moved by 5%. So the realized volatility was much, much higher than the implied volatility. Historically, if you look at the market, realized volatility is most of the time below implied volatility. Why? Because market participants would be overpaying outliers. They will be overpaying downside protection. And based on the Black-Scholes models, you have as well the volatility on the outliers that will be higher. So now let's look at Adobe and look exactly at the same story. So Adobe, as of the close on Friday, a week ago, closed at $395. So if you were about to be buying a straddle at the money, $295, the cost was roughly $24. And at the end of the week, it closed at $98 for a return of 300%. So again, I'm not saying that we should be buying straddle, that we should be buying unexpected increase in the volatility, but this market really have been really kind on big moves, on moves that were unexpected. That is true for this week for the S&P, that is true for most of the stocks, that is true for Adobe, that is true for FedEx. That is something that we discussed in previous webinars that happened in Q2, where actually the implied volatility after earnings was much lower than the realized volatility. So you were really rewarded to be buying increase in the volatility. So now let's jump in the week-to-date asset performances, discussing what happened this week, which is the opposite of last week, which was the opposite of the week before. US equity market are down 5% on the week, so we had a big sell-off. The US dollar very often for the year has been pretty strong, based on the risk off and based on different factors that we explained in the past. I added Ethereum for the crypto because I think that was interesting. Obviously, we had the big noise around the merge on Thursday. So again, I'm not trading crypto, but it's always interesting to see how retail traders will be caught in those stories. That is a typical sell the news event where you get ETH that was outperforming the Bitcoin. And when the news went out on Thursday morning in the UK that the merge was done, literally since then it has been dropping by 15%. So one of the things that you will learn in the markets is very often, if you get all the news that are happening and that are coming onto your Reuters, onto your Bloomberg, onto your FT, whatever, it's already priced by the market. So don't be foolish. That is something that I discussed quickly on the Discord channel, that when the news is out, be careful. And that was pretty obvious. Natural gas, so that is for Europe. Natural gas coming down. Not big decision yet coming from Europe, but hopefully it's going to come. So the picture on the week-to-date industries performances, that is again the opposite of last week, and it's the same as always, where you get all the industry that are down except silver and dollar. So King Dollar on the risk off is doing fine. What is interesting is you can see from the metal mining still have been really underperforming for two reasons. The world is slowing. The economies are really slowing and potentially going into recession. Some of them are already in recession. And we have seen as well several profit warnings from company. We are talking Nucor, we are talking Dow Chemicals. It's not a steel company, but that is a chemical. So what we have been seeing this week is many companies are going through conferences before their earnings that will be in a month's time, and they are updating the market investors about what's going to happen in Q3. And clearly there has been a big slowdown. As I said, Nucor, but that's true with FedEx. So it feels like, from August, mid-August onwards, the economy has really been slowing in the US, and companies have been adjusting numbers. We are talking not some small moves, small adjustments. We are talking, revenues coming down 3 to 10% versus a couple of months ago. On the rates part, so that is the US 10 years that we see here. Yields in the US have been going up, so bonds have been selling off on the back of US CPI on Tuesday that was higher than expected. And as well, expectation, obviously, that the Fed will be still hawkish next week at the FOMC meeting. What is interesting is you still get the same story of Japan and China 10 years staying at the same level, which is still explaining the weaknesses of the Japanese yen, of the renminbi versus the US dollar. In terms of the yield curve, the 10 versus the 2, we are 25 bips, so we are oscillating between 20 bips and minus 20 bips and minus 50 bips. No deterioration here, but just a confirmation that the recession is probably coming in the US if it's not already there. Euro dollar, this is something that I put a lot of emphasis into that. Similar to the chart that we had last week. So we have the last, which is in blue, which is as of yesterday, and in red from a week ago. So for those who are new to the euro dollar, that is a good understanding of what the Fed will be doing in the future, or what the market is pricing from the Fed to do in terms of yields going higher or lower. So as we can see here, the market is expecting, so if you take the lower number here, which is 95.78, we're expecting the Fed to be still hawkish and hiking rates. So we are talking at the terminal rate, something that is the end of the hiking cycle, potentially around 4.25 to 4.5% in the US. But you can see that week on week, we went from 95.78 to 95.42, which is a differential of 36 bips. So from one week to another, market is expecting the Fed to be more hawkish by 36 bips, which is quite a lot. So that has been helping the US dollar. The VIX, we've seen that on the week to date, the VIX is up from 22.80 to 26%. If you think about it, especially on the move on the CPI, the VIX, the implied volatility didn't move too much. One of the reasons is the VIX is a 30 days implied vol, and what we have seen over the last few years is the volatility or the option, and the market is more and more driven by short-term options. We are talking weekly, we are talking daily. So you do have a lot of those options that are expiring in the very short cycle, 1 day to 2 weeks, and that is a bit distorting more later with the 1 month volatility. The yield curve. So the VIX term structure is a bit flattening, and that is something to check. Let's look now at the technical analysis, looking at the S&P futures. So if you go on TradingView, it's ES1. Now there is a clear deterioration. So that is the daily. If we move into the weekly, so that is my weekly. It is very important that we hold this level, and as we are making new lows, if we go back into the daily, there is a clear chance that now we're going to be testing this 3820, 3800, and potentially lower. Nasdaq is the same. Same weakness on the weekly. If you look at the Russell, this is the same. So we're not going to, if you want to be looking more, you look at last week, this is more or less the same picture. And the DAX is still holding this 12,400 level, but there is a good chance that we're going to be testing. Quickly looking at stocks, that is something that we just discussed, looking at why the straddles have been working. Reality in this market is, if you look at support being broken, as we are in the bear market now, if you still believe that the market is not bear in a bear market, you are probably suffering a lot. So when we look at levels, when it breaks violently. So if you are looking at FedEx, the 196 was an important level. We broke it at the open, so no chance, which means, in other words, if you are holding position with stocks, that is a good idea as well to be hedging yourself with options, because the downside with only being with stocks is when it opens with a gap, you're going to be absolutely murdered. Oracle that we discussed last week. So on the earnings, we had a fake, which is, a really nasty candle when you get this big wig. Then it closed really at the lows, and since then it has been going much lower, breaking the 74 support. Adobe, I've been discussing quite a lot on Thursday in the chat, in the Discord, sorry. So the level was 360, pre-market it was at 360. It felt very much like the next level was 312. Now it closed at 300, so you can see the damage that has been done. NVIDIA, this is the one to watch. This is your next trade. This is for next week. We got a very important level. So it closed at 132. We are close to this 128, 129, 130 level. Why is it so important? It has been a leader, is not a leader anymore. And on Monday, they are making a presentation. So that will be one of the stocks to be following. Quickly on the ETH story. So the ETH was clearly, putting all the retail into that space when it was trading at 1700. Then it went down the toilet. That could be explained as well for those of you who are looking at crypto. I'm not trading, but I'm following the space, because this is a good indication, as always, on risk on, risk off, that ETH over the last couple of months was doing pretty well versus the Bitcoin. Everyone was pushing, saying, this is revolution, it's much better. So again, don't be the one that are buying at the top. Euro dollar picture is still the same. Actually behaved pretty well for the week, not making new lows. FOMC meeting will be very important. We are still in this downtrend. We challenged that trend. I think it was on Monday. I've been putting that chart on the Discord channel, and since then we have been coming back into the one as a level. Dollar yen, so this is your next trade. Really, this is the one to monitor for Wednesday and Thursday. Why Wednesday we got the FOMC, and on Thursday we got the Bank of Japan. So really important to see if we might go lower. There is more and more talks of intervention. This is normal. If you look at the Bank of Japan, this is something that they do. This is normal business. And what was interesting is USD versus the CNH. So we broke the 7 level, which is the same story at the dollar yen. As long as the differential in yields goes in favor to the US, as we've seen before, the yields in the US have been moving by 30 to 40 bips up. That helps the US dollar. CL1, which stands for the WTI, no real visibility here. There's a lot of talk between, the Biden administration running out of the reserves, and on the other hand, the world slowing. There is a lot of noise. Again, noise. Not necessarily a good trade. Wait for a bit more clarity. So let's jump now into the presentation of what happened this week. So, as we discussed last week, we had two catalysts for this present week. We had the CPI on Tuesday, so that's what we have here, where I was hoping, to be honest, for a bit of peaking of inflation in the US, but you really got the second factor, the second round of inflation now kicking in, with rents, wages going higher. So CPI was not good. The months-on-months was pretty bad, actually. So you will have hope that the months-on-months will be down. So in other words, what happened? The market was going up, and I'm talking the S&P futures. Again, that was on Discord. That was, and then when the news went out, so that's 1:30 in the UK, the market went down the toilet. So that is really a binary market. That tells you where the market is looking at. So that was from Tuesday onwards, where we have been on a risk off. What was, as said, interesting again is many companies are coming with warnings, profit warnings. We are talking Oracle is not a warning, but the market didn't like the numbers. But if you look at Dow Chemicals, if you look at Nucor, and if you look at the reaction from the market to Adobe, which was potentially, more than potentially, which overpaid this acquisition, but had no choice, because that means this player, Figma, was a big player. They had to pay a high price. So picture for this week, again, the OpEX. So for September, we are down 4.8%, which is, if you look at all the months of this year, we had only 1 month, which was in March. All the other months on the OpEX week have been down. So what we are interested now is what's going to happen next. So for this week, we got different drivers. So the first driver is obviously the Fed and all the central banks. So on Wednesday, we got the FOMC meeting, where the market is expecting the Fed to hike rates by 75 bips, 0.75%. Around 80% is priced for 75 bips and 20% roughly for 100 bips. So that's really for Wednesday. Then we're going to have the meeting with Chairman Powell. That's what if you look at the recent performances of the S&P on the day of the FOMC meeting, you can see that the market is behaving pretty well. Okay, so up, small flat up. So over the last 5-6 FOMC meeting on the day, which means on Wednesday, the market is up. If you look at the days before, there is a lot of volatility before, and there is as well a lot of volatility after. Okay, so before FOMC, after FOMC, tons of volatility on the day, market up. Again, this is not indication that the same is going to happen, but that tells you how the market has been behaving recently. On top of the FOMC meeting, we're going to have a ton of central banks talking and doing things and hiking. So we got the Bank of Japan. So the Bank of Japan is the only one standing and not doing anything. This is why it explained the weakness of the Japanese yen. Really, that was going to be very interesting to see what Kuroda is going to say on the day, because he's under a lot of pressure. So check the Japanese 10 years, the JGBs. Then we're going to have the Bank of England. We're expecting 50 bips, the SNB, Norway, and South Africa. So what you have is the world is in a hawkish mode, where central banks are tightening and putting not necessarily some money out of the table, because quantitative tightening has not really been happening yet, and there's still a question mark of how much they're going to do, but the cost of money is going higher. So that's your first driver. If it's not a question of loving or not loving the central banks, they are part of the game, and you need to do with them. A second, what's your next trade? Clearly driver is next week. There's going to be a lot of stories around US housing. That will start on Monday with the NAHB, which is for the constructing index. Easy to monitor. You can look at it, and looking at the obviously the correlation between the NAHB and the home builders. Then we got the building permits on Tuesday, and we do have a lot of as well home builders in the US that will be coming with their earnings. So KBH, Lennar. So that's going to tell you a lot about how the housing market is doing these days, which is, there is a big question mark here on the housing market, because that house prices in the US are up 20 to 50% since 2020. And that's a big pocket of where US investors, US citizens still are making money. Now, if you think that the US housing could go the other way around, based on the economy slowing or going into recession, and as well, more importantly, for the cost of money, so that the 30 years mortgage in the US is above 6%, that could be very detrimental to the housing. So second one to check, and this is going to be our next trade, which is housing market. So we got central banks, housing market. You got why I wanted to look at NVIDIA is on Monday. As I said, we're going to have this big event for NVIDIA. Not that many earnings, as you can see. This is we are 1 month or 3 weeks away from the start of the earnings season. And in Europe, you potentially have the mess that could come back from Sunday next week with the Italian election. What about, in terms of performance? So we've looked here at the FOMC. In terms of OpEX, how the market has been behaving after OpEX. That is the opposite of on the week of OpEX, where we had so far 7 months positive on the week after the OpEX. Only the last last expiry was negative. So that is the overall color for this week. Again, this market has been very kind and very sweet with people that have been long volatility on names. We've seen that on the S&P. We have seen that on the Adobe, on FedEx. So that is something that you should be checking, which is look at the price of the straddle for the S&P as of yesterday, what the market is pricing for the week for the S&P to move. You can do that on the daily, on the weekly, on the monthly. What are your expectations? So this is it for today. If you want more information for the video series, the mentoring, please join the Discord community. This is something that is growing. We've done this week Ask Me Anything session on Wednesday. That was pretty good. So please join the community. And if you like what you've seen today, just put a like on YouTube. That helps. And I'll see you next week. All the best. Bye-bye.